Stocks plunge as catastrophic job losses and surging oil ignite massive stagflation fears. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 dropped 1.2% to 6,748. The Nasdaq Composite dipped 0.3% to 22,748. The Dow Jones Industrial Average plunged 1.4% to 47,291. The Magnificent Seven tech stocks acted as temporary islands of stability against the broader market correction. Energy and information technology were the lone winning sectors today. Consumer staples and materials suffered severe losses, while financials were absolutely hammered by rising recession fears. Bitcoin traded near $71,000, recovering slightly despite extreme market fear. Gold surged to $5,169 an ounce as a safe haven play. Silver jumped 2.4% to $84. West Texas Intermediate crude exploded past $90 per barrel, surging 12%. The primary catalyst crushing equities was a disastrous February employment report. The United States economy lost 92,000 jobs last month, completely missing expectations. Healthcare shed 28,000 positions, partly due to strikes, while the unemployment rate ticked up to 4.4%. With previous months revised downwards, the economy has seen essentially zero net job creation over the past 6 months. This labor contraction confirmed fears of a broken economy, triggering a severe sell-off in financials and small-cap stocks. Simultaneously, the geopolitical crisis in the Middle East escalated into a systemic threat. The ongoing war involving the United States, Israel, and Iran effectively closed the Strait of Hormuz, freezing 20% of global oil supply. With the United States demanding an unconditional surrender, diplomatic off-ramps appear closed. This shock sent crude oil prices vertical. Energy stocks rallied, but the broader market panicked as skyrocketing petroleum costs threatened to squeeze corporate profit margins and reignite runaway inflation. The 10-year Treasury yield hovered near 4.12%. The 10- and 2-year yield curve saw a bear steepening with the 10-year trading well above the 2-year yield. The US dollar index retreated to 98.96. The VIX volatility index spiked 12% to 23.75. This surging volatility highlights intense anxiety over debt sustainability and persistent inflation. The CNN Fear and Greed Index dropped to 33.8, remaining deep in the fear zone as consumers and investors brace for an extended economic squeeze. Looking ahead, Wall Street is forced to navigate a toxic stagflationary environment. With the labor market cracking and oil prices exploding, the Federal Reserve faces a nightmare scenario where cutting rates could worsen inflation, but holding them could deepen the recession. On our watch list for next week, China releases its Consumer Price Index data on March 9th. The critical United States Consumer Price Index report drops on March 11th. United States initial jobless claims will be published on March 12th. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.